The hidden truth about the Iraqi Dinar and Vietnamese Dong. What the IMF and World Bank are really watching by Iraqi Dinar RV for years. Discussions around the Iraqi Dinar, IQD, and Vietnamese Dong, VND have sparked excitement, speculation, and at times frustration. Countless holders of these currencies are waiting, watching, and hoping for that monumental shift, revaluation. But what if most people are missing the true signals? What if the real green light for revaluation doesn't come from oil deals, trade agreements, or even central bank announcements? The truth is, global financial institutions like the International Monetary Fund, IMF and World Bank are not moved by hype or internet rumors. They look at something far more technical, far more telling: inflation. Today, let's uncover the overlooked but vital truth that inflation and monetary stability are the real heartbeats of any revaluation story. And once you understand this foundation, everything else starts to make sense. Inflation, more than just a statistic. When you hear the word inflation, your mind might jump to rising grocery bills or fuel prices. But in the world of global economics, inflation is not just about daily expenses. It's a barometer of economic health. For countries like Iraq and Vietnam, inflation tells the IMF and World Bank whether the central bank can manage its currency, maintain market confidence, and control monetary policy effectively. In simple terms, low, stable inflation signals discipline, predictability, and trustworthiness. Imagine you're a business owner in Baghdad. If prices swing wildly from one month to the next, how do you plan? How do you manage your stock, pricing, or payroll? You can't. The same applies to families trying to save or investors deciding whether to enter a market. High inflation erodes confidence and makes long-term planning nearly impossible. The IMF and World Bank. Why they focus on inflation while media outlets often spotlight oil reserves or government announcements. The IMF and World Bank are laser-focused on inflation numbers. They've seen enough failed currency reforms to know that without monetary stability, any change in exchange rate is doomed to collapse. Inflation control shows that a country has strong monetary tools, disciplined leadership, and a functional financial system. It's the first, and arguably the most important, step toward a successful revaluation. This is why, even when inflation starts to decline, you won't see a sudden revaluation the next day. Think of it like passing a major exam. It doesn't guarantee graduation, but it does mean you're finally ready to take the next step. Revaluation versus redenomination. A common confusion in the currency world. Two words often get thrown around and misunderstood: revaluation and redenomination. Redenomination is when a country changes the face value of its currency without altering its actual worth. For instance, 1,000 dinars today could become 1 dinar tomorrow in accounting terms, but the buying power remains the same. This is often done to simplify calculations after years of high inflation. Revaluation, however, changes the real value of the currency. If 1 USD used to equal 1,300 dinars, and after revaluation it only equals 800 dinars, the IQD has gained value. This is the outcome that investors and currency holders hope for: a stronger currency with increased purchasing power globally. Why low inflation matters more than you think. Let's say Iraq or Vietnam tried to revalue their currency during a period of high inflation. What would happen? Likely the new rate wouldn't hold. Prices would continue rising, the public would panic, foreign investors would pull out, and trust in the financial system would collapse. That's why central banks move cautiously. They wait for not just 1 or 2 months of low inflation, but consistent, proven price stability, 6 months or more often. This shows the economic systems in place are not only effective but resilient to shocks. Once this consistency is proven, conversations begin. Meetings between the IMF, World Bank, and national financial leaders start to include terms like currency reform, rate adjustment, and monetary strategy. Vietnam's case. Following a similar path, Vietnam is another country under the microscope. Like Iraq, it has gained attention for its rapid economic growth and strong exports. But again, the deciding factor for any currency adjustment is inflation stability. Vietnam must show that it can maintain stable prices, hold solid foreign reserves, and continue export-led growth without overheating the economy. If inflation is volatile, no matter how good the other numbers look, currency reform is considered too risky. Inflation as a report card for reform. Why do low inflation and reforms go hand in hand? Because inflation reflects how well new systems are working. If a country modernizes its banking sector, enhances digital payments, and restructures its debt, and inflation remains low throughout, that's a very good sign. It means the changes are taking root. In Iraq's case, the government has undertaken several reforms, including digital banking initiatives, anti-corruption efforts, and foreign investment incentives. These don't make headlines every day, but they create the foundation for monetary stability. Why IMF and World Bank wait even after the economy looks ready? Another key question from the community is, if inflation is low now, why hasn't revaluation happened yet? The answer lies in coordination and timing. Even if a country checks all the boxes, low inflation, solid exports, increasing reserves, it doesn't mean global conditions are aligned. The IMF and World Bank have to assess not just the country's readiness, but also regional stability, global market conditions, and long-term sustainability. Revaluation involves economic stress testing policy, modeling debt impact analysis, political risk assessments, coordination between central banks, finance ministries, and international bodies. This process takes time, but it also builds long-term strength. A rushed revaluation often leads to collapse. A well-planned one leads to real economic progress. Inflation and the people. A ground-level impact. While much of this conversation revolves around institutions, let's not forget the real-world impact. Stable inflation improves everyday life. Families can save. Businesses can invest. Banks can lend. It brings certainty to markets and trust to the currency. When a country revalues with high inflation, people may see no real benefit. Prices rise, purchasing power remains unchanged, and the new rate feels meaningless. But when inflation is low and revaluation happens, the value is real. Savings increase, imports become cheaper, and confidence is restored across the board. Political stability also matters. One final piece of the puzzle is political stability. Inflation may be the heartbeat, but without political order, even good inflation numbers can't carry a country through revaluation. That's why the IMF and World Bank look at the whole picture: monetary policy, political landscape, public confidence, and economic infrastructure. Revaluation is never based on just one factor. But without inflation stability, it's not even a conversation. Why investors should watch inflation reports closely. If you're holding IQD or VND, inflation reports are your roadmap. Each report showing stable or falling inflation is a sign that the foundation is strengthening. Every IMF or World Bank statement about price control or monetary stability means the country is moving in the right direction. Watch the headlines, yes, but pay closer attention to the numbers that matter. Inflation isn't hype, it's the signal that says we're getting closer. Conclusion: the silent force behind revaluation. Let's close with one truth. Low inflation doesn't guarantee revaluation. But without low inflation, revaluation is impossible. If you understand this, you'll understand why things move slowly and why they must. It's not about delay or politics. It's about ensuring that when change comes, it sticks. So if you're holding on to IQD or VND, be patient, but be informed. Every stable inflation report, every successful reform, every positive economic update is another brick laid in the foundation of a stronger future. Because in the end, when that revaluation does happen, it won't be a guess or a gamble. It will be built on real strength, real discipline, and real stability. Thanks for reading today's insight from Iraqi Dinar RV. If you found this article helpful, be sure to subscribe to our channel for daily updates on the Iraqi Dinar, Vietnamese Dong, and global currency developments. Drop a comment below and let us know what you think the next big move will be. Until next time, stay informed, stay patient, and stay hopeful. Disclaimer: this article is intended for educational purposes only and does not constitute financial, legal, or tax advice. The foreign exchange market is inherently risky and prone to misinformation. Consult with qualified professionals before making any investment decision. Iraqi Dinar RV is not liable for any losses or damages resulting from the use or reliance on this content.